Overnight, the International Monetary Fund, the IMF, cut its forecast for world growth for 2012 and 2013. For 2012, the IMF recast its forecast down from 3.6 to 3.5%, and for 2013 down from 4.1% to 3.9%. Although the cuts are relatively small, the IMF is still concerned about downside risk. That is to say, the fact that things turn out to be much worse than forecast. In particular, the IMF is still very concerned about the European debt crisis, an issue which it says needs to be reserved with the utmost priority. In the US, also some poor news in terms of retail sales this time. Retail sales in the US for the month of June were down by around 0.5%. The key issue here was that analysts had actually expected it to be an increase of around 0.2%. So this decrease is now the third decrease in a row. Looking at markets then, that news out of the US in terms of the retail sales weighed relatively heavily on US investors' minds, the Dow dropping by around 50 points. Most European indices were relatively flat, and in terms of currency markets, the Kiwi was up against the US, but down against the euro, the pound and the yen, and relatively flat against its Aussie counterpart. Yesterday I took a look at what the impending drought's likely to mean for US beef farmers. Today we'll have a look and see what the drought is forecast to do in terms of US dairy farmers. Figures released by the US Department of Agriculture showed that milk production in the US increased around 1.7% between 2010 and 2011 and around 3% to 2012. The US Department of Agriculture had expected, in fact, for 2013, milk production would continue to increase. However, it's revised down those estimates on the basis that feed costs are significantly higher than expected, as well as the fact that the high temperatures that are currently being expected are likely to have a short-term impact on yield. So now 2013 is expected to pretty much mirror the production from 2012. The reduction in the production estimates is also expected to have a small increase on prices. However, the prices in the US are still expected to be significantly lower than they were in 2011. Given that the drought is really at its early stages at the moment, these re-estimates potentially could be seen as somewhat pessimistic. However, US farmers still have in the back of their minds the impacts of the 2010-2011 drought, and for them, this is probably a little bit of a sense of grim deja vu.